prepare this here. So that's uni, which is Uniswap, and we're messing with Bybit because if we find one, we'll just kind of like maybe do a trade and see what it looks like, do something that makes sense. Okay. Okay, so this gives you some perspective, which is cool. This is like, you know, the smaller time frames, like the intraday trading, right? The ones that if I see something I'm interested in and I want to jump in, you know, right then and there, this is what I would mess with. And so here I'd probably go to this. Cool. Just want to make sure that it's loading up the scalping. Looks like it is. Some of these smaller ones can make you tempted to do a short because you see blue breakout bars. But if it's not backed up by a lot of blue on, you know, other time frames and like red dots, in other words, then it's really probably more likely to be just taking you to a better entry for a long. So it's a little tricky because you see all these blues and you're like, man, I should short that. It's going down. But if you just have a little bit more of a bigger picture perspective, you'll kind of realize that, okay, actually what's really probably happening here is it's going down and it's like, if I look at this box over here on the bottom right, I can see the past 5 4-hour bars have been bullish and mostly not had a whole lot of bearish pressure. And so chances are like it's just taking me to a place where maybe right around that 4-hour movement monitor, I should actually long it, you know, and then these things will be more than likely, these things will be kind of short-lived. They're just there and taking me to a better entry. And it'll be something like this, right? Like on this chart, that might have been a place. This might have been a place. This might have been a place. But you can see all these little lows that show up are all kind of like higher lows on an overall uptrend. You just have to be careful because Uniswap here has wicks that if you are using leverage, you know, could easily stop you out. So that's kind of another thing to look at just separately, and that's also why I have the trend scanner. It kind of helps to, you know, try to try to filter out assets that have a ton of wicks. But sometimes you just have to look at it, right? And you're like, okay, I need to kind of note that even the 4-hour on these candles, it's pretty dangerous, you know, overall. So maybe I just need to at least consider that I shouldn't use really high leverage because I'll probably get stopped out. With this many wicks, it's super easy to get stopped out. And not all assets are like that. So for instance, if I went long and I thought, oh, this is a good place to go long, and I think I'm going to do this, right? The truth is like our average, you know, position is something like maybe, I don't know, it could be if you were doing spot trading, you'd have been all right if you actually like entered there, because you'd have bought Uniswap and you'd have said, okay, now I believe it's going to keep going up, and I'm just gonna set my stop loss at 3.5%. But the moment you have 2x leverage, 3.5% really becomes a 7% loss. And the moment you have 3x leverage, which really isn't that much, 3.5% becomes like closer to a 10% loss, you know. And so you can see how easy it would be to lose at even 4x, 5x, or whatever, being that these little wicks on a 4-hour candle are 3.33%. And so and this is kind of like going to your email a bit, when we talk about, you know, what makes sense for leverage and what makes sense for risk and is it worth it? This is like the kind of thing to consider. And if I was thinking about doing it here, I already knew from this candle over here that this thing has the potential to stop me out really easily any given 4-hour candle. So if I do happen to get in a good position, it's actually smart to just put a stop loss in profit and do what Joel calls a free roll, which is like I'll either make a little bit of money and I'll get stopped out, or maybe I catch a break and it expands and I do well and I and I win. Uh, but if I was thinking about entering here, my point is that I could have just looked back of just a day or so and I could go, oh wow, the wicks on this thing are crazy. And so as I do that, even over here, here's another one right here. I could kind of see, a third time that it's not uncommon for this thing to wick 3%, even though the overall uptrend is up. So that alone, might make me say, you know what, I'm gonna find something a bit more stable. And to be honest, it sounds crazy because Bitcoin, is super volatile, but Bitcoin, is more stable than most of these. So that's kind of, I think, a good reason to look for a fully green scalping block. A company, so the 1 minute all the way to the 4 hour being fully green, like it's just on a nice run. And then also to have, a lot of this be fully green, is a nice place to jump into an alt. And then depending on how volatile it is, you can do like lower leverage. I never recommend 10x leverage or anything like that on alts. I think people are better off. You'll win so much more money doing 2x and 3x leverage. People think that they're going to win a lot of money, and make a lot of money by doing 10x. And the truth is, generally, the higher the leverage, the more you lose. The lower the leverage, the more you win. It just takes, winning more often, playing the game, maybe on a daily basis or something like that. So these right here, again, these are just great examples of not having a good amount of confluence. Like I don't see any trade on this whole thing that I'd want to take. They're gonna break, so I could check tomorrow, and that's what I do. I'll just check any given morning. I could check tomorrow, and one of these, could easily shift and be like full red or full green, and then it becomes the one that I want to go play. But today, these are great examples of there's just not really any great confluence. These dots are here to help me not lose money. Because if I jump into any one of these, it's very unpredictable right now. If I look at these, this one is interesting. And in fact, I was looking at GMT. It's interesting to me, but it's not confirmed yet. So I would, I'd probably like just make it a point to go look at GMT, over the next few days and see if I can find a moment in time when GMT starts turning green in all of those time frames or almost all of them. And when it breaches this 100, what is this? This is like the 100-day moving average. That's this line right here. So I want to be past that. I don't want to long right underneath that major moving average. And then on top of that, just using the custom algos, our own pressure lines, there's 2 of them right there. I don't want to long right below those pressure lines. There's just way too much here that could just, cause a rejection and cause it to go right back down. So these charts, to me, like a lot of the data here, any given day, there's just so much data that says like this is not one to play with right now. I like SUI. SUI looks decent, except for it's just right below this big stack of pressure lines. So rather than forcing myself to make a move and to enter a trade and I need to long or I need to short something just because my impulse is driving me, the better decision is I like SUI. SUI may actually be doing something. Sometimes assets like SUI ignore these lines. Like they have the most probability of being able to ignore these lines and blow through them. But being that the 200-day moving average is right here in that ribbon, and you have all of these pressure lines right here, if I went and did the math on how smart or dumb that would actually be, I would just kind of check it out, right? Let me delete that so it's not so messy. But if I really wanted to like say, hey, how smart or dumb is this thing that I'm about to do? Then I could literally take my long position. Oh, there it is. It's already there. I could take my long position and I could go, okay, if my dream trade happened, it would be like, I mean, like, it would be something like that. And just to get a 6 risk reward ratio, it actually has to pass through 1, 2, 3, 4, 5 pressure lines, a channel, a 100-day channel, right? So it has to pass through line, 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 channel has to break, not respect it, which it obviously does respect it pretty well. So it has to break that channel, and then it has to pass through the low of the 100-day ribbon for the 100, or the, I think that's actually the 200-day moving average, and then it has to pass through the close of the 200-day moving average, and then it has to pass through the high of the 200-day moving average. And if we could do that with the stop loss that I probably need for this one, it's only a 6 risk reward ratio. And the truth is, if I'm being honest with myself, the chances of passing through 1, 2, 3, 4, 5, 6, 7, 8, really 9 if you count this peach line, like 9 major obstacles is so small that I shouldn't do it and I should just move on. The one thing I would say that would be an option though is the same thing that I mentioned with that first one, which is, if I'll tell you what, if Sui got here just above all that crap, and this could be a week later, right? This is not going to happen. More than likely, it's not going to happen instantly. But regardless of what Bitcoin does, if Sui gets past all that junk, I could set an alarm right there for the day that it closes, not even that high, really, the day that it closes above that last line. And that's where I would set my alarm. And just the day that it closes there, the 1-day candle, that's when I would go in and I'd say, Sui is actually getting bullish enough for me to long. But until then, there's just so much junk. So that's where you could literally right click on the line that I just plotted. And then it gives you, all the different things to set an alert. But otherwise, yeah, it's just not a great setup at all. So even while I'm kind of like teaching this to you, I don't want to pretend that there's good setups when there's not. I don't want to like convince myself just to, just to give you a good example. So I might as well show you like what's really here. And then if we find one, of course, that's great. So next one we have here, kind of the same thing, right? A lot of these are trying to break some of these moving averages. So these are the 1-day charts. So they have some work to do, but this purple one is the 50-day moving average. That's usually a key resistance. If it's not, then this is the 100-day moving average. You have a pressure line in between. If I were to tell you like my honest thought on a trade there, as far as just what I can see, I think that you would actually be a lot better off looking and seeing if by the time it got there, shorting it made sense, and maybe going with the trend. Now you have to see what all those lines look like when it gets there. But I think that if you did do that, using those 2 lines for like your entry and your stop loss, using that channel for your stop loss, these would be really great. And then if by the time we get there, Bitcoin is, running and it looks like the whole market's going to reverse because Bitcoin's at 68 or 69 and the stock market's doing great. Well, then, of course, if conditions are like that, you may choose to not take that trade at all. But otherwise, the short is going with the trend. It's going with these larger channels, there's a lot more, I would say, logic that says go for the short than anything else. And then we had one today. This was one that I posted in Platinum Setups, and this is where I think I'll show you the fib stuff, because I've wanted to have that on a video anyway. I think I did one, but never hurts to have others. So